talked about the manufacturing opportunity as well as this reorientation or re-globalization that we're seeing in light of the geopolitical flashpoints. And we now have more to deal with given what's happening with Israel and Palestine. But specifically on China, what's the view? The recovery is slower than expected and anticipated. We don't know how the real estate sector is going to unravel and what that will eventually lead to, whether it will lead to systemic risks in China. But what's the outlook now on China? I think the jury is clear that decoupling is not something that we're going to see happen. We probably will see de-risking, but not decoupling, which was the expectation.
I think that's true. Look, I think all companies today are looking at their China operations, and number one, making sure that data that's produced in China stays in China. That's important. It's important to the Chinese regulators. So we have all our clients looking at, what technology they're using in China, what data they're producing in China, and this is important to both sides. And so that's number one. Number two, all our clients are going down the route of more of what's produced in China is sold in China. What's produced elsewhere is sold elsewhere. So those, I would say, are two rules of thumbs. And then, I do think the world wants to see where China is going from a future perspective. I think their economy has slowed, and they're still kind of coming out of the COVID period. And then there's going to be, right now, I would say, there's acceptance to invest in China in certain sectors, certainly not in tech, and certainly not in any kind of sector that could have a geopolitical consequence. But in sectors like consumer, many companies, both American companies and European companies, do want to take advantage of the Chinese consumer. And so when you talk about things like retail and fashion and so forth, that's still a huge investment for companies in China.